Have you ever wondered why some people build wealth consistently? The answer often begins with the way they think. Smart investors view money differently than most ordinary people. They see opportunities where others only notice uncertainty. Their success comes from decisions, not from luck alone. Every smart investor starts by understanding basic financial principles. They know money should work harder than they do. Instead of spending everything, they focus on growing assets. Assets are things that generate value over time. Smart investors constantly search for valuable assets to own. They avoid making decisions based purely on emotions. Fear and excitement can easily lead to poor choices. Successful investors learn to control these powerful emotions. They focus on facts rather than temporary market noise. Market prices rise and fall every single day. Smart investors understand that volatility is completely normal. They do not panic whenever markets experience short-term declines. Instead, they analyze situations carefully before taking action. Patience is one of the most valuable investing skills. Wealth rarely appears overnight through responsible investing methods. Smart investors think in years rather than days. They understand the power of long-term compound growth. Small gains can become significant over extended periods. Time often becomes an investor's greatest financial advantage. Smart investors also prioritize continuous learning and improvement. Financial markets constantly evolve with changing global conditions. Learning helps investors adapt to new opportunities effectively. They read books, reports, and reliable financial information. Knowledge reduces uncertainty and improves decision-making abilities. Smart investors never assume they already know everything, and they remain curious about businesses, industries, and economies. Curiosity often reveals opportunities others fail to notice. And successful investors carefully manage risks before seeking rewards. They understand every investment carries some level of uncertainty. Managing risk helps protect wealth during difficult periods. Smart investors avoid putting all resources into one investment. Diversification helps reduce the impact of unexpected losses. Different investments often perform differently under various conditions. Balance creates stability within an investment portfolio. Smart investors also maintain realistic expectations about returns. They avoid promises of guaranteed wealth and quick profits. Extraordinary claims often hide significant risks and dangers. Careful analysis is always better than blind optimism. Smart investing begins with mindset before any financial action. Developing the right mindset creates a foundation for success. Smart investors understand that every dollar has a purpose. They carefully decide where their money should be allocated. Random decisions rarely lead to long-term financial success. Planning helps investors stay focused during uncertain periods. A clear strategy reduces confusion and emotional reactions. Smart investors set specific financial goals before investing. Goals provide direction and motivation throughout the journey. Without goals, investment decisions can become inconsistent. Some goals focus on retirement and future security. Others may involve education, business growth, or freedom. Smart investors regularly review their progress toward objectives. They measure results instead of relying on assumptions. Tracking performance reveals strengths and weaknesses over time. Data helps investors make better future decisions. Smart investors understand the importance of cash flow. Cash flow represents money moving in and out. Positive cash flow creates more investment opportunities. Negative cash flow can limit financial growth potential. Successful investors pay close attention to expenses. They know unnecessary spending reduces future wealth creation. Saving money provides fuel for future investments. Every investment begins with capital that is available. Smart investors build strong financial habits consistently. Habits often determine long-term outcomes more than talent. Consistency creates results that accumulate over many years. Smart investors study businesses before purchasing ownership shares. They want to understand how companies generate profits. Strong businesses often have sustainable competitive advantages. Competitive advantages help companies remain successful over time. Investors look for quality rather than temporary popularity. Popular investments are not always the best opportunities. Smart investors think independently and avoid following crowds. Crowds can become emotional during market booms and crashes. Independent thinking helps investors avoid costly mistakes. They ask important questions before committing their money. What are the risks involved in this investment? What factors could increase or reduce future value? How does this investment fit long-term goals? These questions encourage disciplined decision-making processes. Smart investors understand that mistakes are unavoidable sometimes. Even experienced investors occasionally make poor decisions. The key is learning from mistakes quickly. Every mistake contains valuable lessons for future success. Growth comes from reflection, adaptation, and improvement. Smart investors view every experience as an opportunity. Smart investors understand the importance of controlling emotions. Emotional decisions often lead to unnecessary financial losses. Fear can cause investors to sell too early. Greed can encourage investors to take excessive risks. Successful investors recognize these emotions before acting. They develop discipline to stay committed to their strategies. Discipline separates experienced investors from inexperienced participants. Markets often test patience during uncertain economic periods. Smart investors remain calm when others become anxious. They focus on long-term goals rather than short-term headlines. News reports can create excitement and panic quickly. Not every headline requires immediate action or concern. Smart investors filter information carefully before responding. They seek facts instead of reacting to speculation. Understanding economic trends helps improve investment decisions. Interest rates can influence markets in significant ways. Inflation affects purchasing power and investment performance. Economic growth often creates opportunities across many industries. Smart investors pay attention to these important factors. They understand how global events impact financial markets. Knowledge allows investors to adapt when conditions change. Flexibility is valuable in a constantly changing world. Smart investors also appreciate the value of research. Research reduces uncertainty and improves confidence levels. They investigate opportunities before committing their resources. Good research often reveals hidden strengths and weaknesses. Smart investors compare multiple opportunities before choosing one. They avoid rushing into investments without proper analysis. Patience often leads to better decisions and outcomes. Smart investors know the timing is difficult. Predicting short-term market movements is extremely challenging. Therefore, they focus on consistency instead of predictions. Consistency can outperform attempts at perfect timing. Regular investing builds momentum over long periods. Small contributions can grow substantially through compounding. Compounding allows money to generate additional money. This process becomes stronger as time passes. Smart investors respect the power of compounding deeply. They start early whenever possible to maximize benefits. Delaying investments can reduce future growth opportunities. Time is one resource that cannot be recovered. Smart investors use time wisely and strategically. They remain committed despite temporary setbacks and challenges. Persistence helps transform goals into lasting achievements. Smart investing is ultimately a lifelong learning journey.
Smart investors understand that wealth creation requires commitment. They focus on building strong foundations before seeking growth. A solid foundation supports success during challenging times. Smart investors avoid chasing every new investment trend. Trends often attract attention before their true value appears. Careful evaluation is more important than excitement. Smart investors think logically when opportunities arise. They ask whether an investment creates real value. Real value often leads to sustainable long-term returns. Investors who understand value make better decisions consistently. Smart investors also recognize the importance of diversification. Diversification spreads risk across different types of investments. This approach helps protect portfolios from major setbacks. No investment remains successful under every condition. A balanced portfolio provides greater financial stability. Smart investors regularly review and adjust their portfolios. Changing conditions may require strategic modifications over time. They remain flexible without abandoning their core principles. Adaptability helps investors respond to evolving opportunities. Smart investors maintain realistic expectations about investment performance. They know that losses sometimes occur naturally. Temporary setbacks do not always indicate failure. Learning to handle losses builds emotional resilience. Resilience helps investors stay focused during uncertainty. Smart investors understand the difference between investing and gambling. Investing relies on analysis, patience, and calculated decisions. Gambling often depends heavily on unpredictable outcomes. Successful investors avoid unnecessary speculation whenever possible. They seek opportunities with favorable risk-to-reward relationships. Smart investors value financial independence over material appearances. They prioritize long-term security instead of short-term status. Financial independence creates freedom to make important choices. Wealth becomes a tool rather than a destination. Smart investors continuously improve their financial knowledge. Every year offers new lessons and opportunities. Markets evolve, technologies advance, and economies transform. Lifelong learning helps investors remain prepared for change. Smart investors surround themselves with valuable information sources. They learn from experts, books, and experience. Knowledge combined with action produces meaningful results. The smartest investors never stop refining their approach. They understand that success is a continuous process. Small improvements can create remarkable long-term outcomes. Thinking like a smart investor begins with daily choices. Master those choices, and wealth can follow naturally.